So I just want to welcome everyone to this AARP Tax Aide presentation about what to do if you haven't filed your taxes yet. My name's Teresa Holt. I'm the AARP State Director, but I'm going to pass it over to Allegra, who is our Tax Aide State Director. Take it away, Allegra.
Okay. Well, welcome everyone. So my presentation, I was asked to kind of talk about what can you do on April 13th when April 18th is just around the corner and you have not done your taxes. First thing I'd like to explain though is everybody thinks tax day is April 15th. And so why is it April 18th this year? And it's because the IRS's office is in Washington, must be open on tax day. Not exactly sure why, but it must be. And because Washington, D.C. celebrates Emancipation Day on April 16th, which is Saturday, and that is observed on the nearest weekday when it falls on a weekend. So this year it's 4/15. So as a result, it moves to the following Monday. And actually 4 years out of 10, tax day is not on April 15th. So, and get used to it because in 2023, it's also going to be April 18th again. So first question that I'm going to approach is, I haven't filed my taxes yet. What can I do now? Well, your choices are somewhat limited, but you can file an extension to delay filing until October 17th, 2022. But please note, this is an extension to file, not an extension to pay. Your taxes are still due on April 18th. You file the extension by April 18th at midnight. And if you choose to mail it rather than do it online, and I'll talk about that a little bit later, please have the envelope hand stamped. By hand stamping it, you assure that the postmark is correct for April 18th. The only post office I know that's open late on April 18th is the one at the airport in Anchorage. If you're not in Anchorage, it could be someplace else. You should estimate the tax you owe, and you pay that amount or as much as you can. Now, you haven't done a tax return. How are you going to estimate the amount of tax you owe? Well, you can base it on last year if not too much changed. Or make your best guess. If you send too much money to IRS, it will refund the money extra money, and it will pay you interest on having that money. May take a while, but you'll get it. If you owe IRS, this extension will stop the penalty for late filing. That penalty is kind of steep. It's 5% of the amount due per month, up to a maximum of 25%. Per month. However, the interest on any unpaid amount will start immediately, and that's why it is not an extension to pay. It's a much smaller percentage, but it gradually does go up to the same 25% penalty and interest. So, that's the best way to get one of the extensions. Well, if you have access to a computer, IRS.gov is the place to get all your information and all your forms. You can download this form, which is called 4868 Automatic Extension. The main page of IRS says File an Extension. You click on that and you'll get to, this is an option. If you are at a location where taxes are being done, these are available, generally are available in hard copy for you to fill out, but do notice part 2 where it talks about doing an estimate of their tax liability. There is an online option, and truthfully, if you can do it, the best way to deal with IRS at this point is online. The fewer people that have to open envelopes or move papers around, the better, the quicker things will happen for you. And so if you go to irs.gov and say, I want to get an extension, they will offer this free filing for your extension, no matter your income. Now, if you've looked at free filing before with IRS, you know that there is an income limit. but with the extension, there is no income limit. There are software partners. I probably can't read this, it's kind of small, but there are software partners that offer free filing for your extension. You do need to create an account to use one of these partners. It's not a lot of information, but you do have to have a cell phone in your own name and an email account. And I'm going to tell you that among these options, and there are 6 presented here, TaxSlayer and Tax Aide hide the option for how to get a free filing, and it makes it look like you don't qualify. But the others have a big button that says file an extension. So I would recommend one of the others in this case. It's not just this last year that the current year that we have this issue. People haven't filed the taxes in a prior year. And what happens then? Well, first off, there's no extension to file for, it's not possible to file an extension for a prior year. So if you've owed IRS, you have undoubtedly gotten a letter and a bill already for a prior year, which includes both the penalty and any interest. And that amount owed continues to be owed until you pay. There's no deadline. If you were due a refund, there is no penalty or interest. But until you file, you will not get that refund. And important to note is there is a 3-year window to file for your refund. So if the prior year you didn't file is 2018, you must file by April 18th, 2022 to get that refund. If it's the more recent years than that, you can wait till next year and get the refund to file if you don't have an opportunity to do it this year. If the prior year is before 2018, you still owe IRS if you owe, but the refund is now returned to the general coffers of the government. You no longer can get that refund. So if you didn't file in 2018, think you were getting a refund or a credit that you perhaps are expecting, please try to get your return done somehow. And so is there any way I can still get my 2021 taxes filed? But you can also write in here the 2018 taxes and because of the deadline. I have to inform you that most free tax preparation sites that are run by AARP Tax Aide or IRS have either closed for the season or are at capacity. It's not possible to go there to get your taxes. Many paid preparers are still working feverishly, but they may be overwhelmed, but I'm sure they have extended hours. It's worth it if you have a refund coming, certainly to spend the money on a paid preparer. You can prepare your taxes yourself for 2021 only. Prior years cannot be done using a free online tax preparation software partner. There's a link here. Obviously, you're not seeing this link, but most of the IRS things are pretty easy to find if you just go into their search box and say free filing, and it will bring up this page. For those of you that are in Anchorage and perhaps other places in Alaska, there may be some free tax preparation options available through the summer of 2022. And in Alaska, we're going to ask you to call 211 after May 1st for information on where those tax sites might be and what their hours might be. So here's the second thing I was supposed to cover. So is what if I can't pay the taxes? Well, you're going to have to find a way. IRS has several payment options for people that can pay in full. Doesn't have to be a check. It doesn't have to be direct debit. It can be your credit card, which would extend, the payment, maybe allow you to do it. You can use IRS Direct Pay to make payments, either in part or full when you can. But just know that if you don't make a full payment through those options, you will still continue to get your interest penalties. And again, again, the IRS, different ways people can pay their federal taxes. If you can't pay in full, your specific tax situation will determine your options. And they include full payment, short term, which means I can pay everything in 180 days or less, or long term payment plans. And that's an installment agreement paying monthly. There is a setup fee for that last one, no matter how you do it. But even if you do it online, but applying online is always preferred. As I said, the fewer people that actually have to handle a piece of paper or talk to you on the phone, the better off you are. But if you do have to call, mail, or go in person, if your local IRS office is open, there will be additional setup fees, or there may be. Again, it's the kind of language they will charge you if they can, but sometimes hardships are allowed. Just remember that IRS must approve your payment plan for it to be effective. So don't start sending money and think that IRS is happy at getting $10 a month. That may not be what they will accept. And there is an online payment agreement application also on the irs.gov website. Well, now you found out. So I'd like to talk a little bit about what can I do now? How can I make a difference next year so that I may have the same thing happen, that I owe much more money? There are ways that you can do this. If you are getting a paycheck, file a new Form W-4 with your employer as soon as you can. It's already almost 4 months through the year, which means 1/3 of the year is gone. So making the correction as soon as you can will help reduce the amount of taxes you owe. IRS, again, has a withholding estimator that you can use, and it's particularly helpful for what your family situations might be, or whether the number of jobs you've had. So it's a good tool that kind of tells you what to do. You print it out if you can, and you take it to your HR or payroll office, and they will help you. If you receive a pension or Social Security, you can have taxes withheld from those income sources. Many people do not. Let me take that back, not most. The Form W-4P is used for a pension, and the Form W-4V is used for Social Security. You can ask them to withhold at least 10%. You can go up above that if you'd like. If you receive unemployment, use Form W-4V to have at least 10% withheld. Remember, unemployment is taxable in Alaska. And we have had many, many people come to our tax aid sites who had nothing withheld. And had they had their 10% withheld from unemployment, they would have not owed taxes. So we always recommend that people do that. So all those forms and their instructions can be found on irs.gov simply by going to the current forms and instructions page. So there are still some things you could do for 2021, but you got to act fast. If you have an existing, and you owe money, of course, if you have an existing traditional IRA and have not maxed out your 2021 contributions, you can make a contribution to that account until April 18th. But you can't use, you've got to have money to do it. I mean, it's so, if you have the cash to pay the IRS, maybe you'd like to pay yourself instead by opening an IRA. The maximum contribution is $6,000 per qualifying individual. And if you're over 55, you can catch up another $1,000. If you do this, be sure to tell your bank or your investment advisor that this is a 2021 IRA contribution, and it has to be a traditional contribution to be an adjustment. Otherwise, they're going to automatically put it in 2022. So just be very, very sure that you've told them that, and make sure the paper says that. IRA contributions are an adjustment, which will reduce your adjusted gross income, thus your taxable income, and thus your taxes. So as I said, you can pay yourself in your future rather than IRS. If you had the money to pay IRS, you might want to consider this as an option instead. The kind of the cousin of the IRA, in terms of being able to use an adjustment, is the health savings account, which is a tax advantage savings account to cover medical expenses that are not covered by a high deductible health plan. You have to have a very specific plan. Each individual in a household would have to have their own HSA. It is a wonderful investment. I'm not supposed to be talking about investments, but it is tax-free when you put it in. It grows tax-free, and it's tax-free if you take it out, provided you use it for medical expenses. That is a triple crown for tax deferred. So you might, even if you don't want to do it this year, you might want to look into this option. Many employers offer an HSA as one of their options. I do want to say that if you already filed 2021 tax return without doing these adjustments that I just talked about, and you want to do them, an amended return can be done. And so it is possible to do that amended return and basically anytime. But again, if we have summer operations, you can do it then. But do remember, the contributions have to be made by April 18th. The amendment can be done anytime. Okay. So get yourself an organizing tool. I am a real fan of organizing. I think it really helps planning and being ready for taxes next year. It's never too early to start a folder for 2022 taxes. If you've done your 2021 taxes, put a copy of that tax return in there. It's good for reference. It's good for your reference and the reference of anyone who helps you with your taxes. During the year, as you go through the year, any tax-related documents you might get or expenses that might ultimately be something that could be done on a tax return, go ahead and put them in the folder. You've got them in one place. And then when your tax documents you need, like your W-2 and your 1099-Rs, come next January and February, you can add them to the same folder. You have everything in one place. Now, right now, the standard deduction is most advantageous for people because it's pretty high, but it's going to sunset in 2025. At least that's what we hear. But don't forget, your circumstances could change during 2022 as well. So you can see those numbers are pretty high and pretty hard threshold to get over. But mortgage interest, real estate taxes, sales taxes, depending on where you live in Alaska, and do note there's a maximum combined amount of $10,000 for those two. But the one that might sneak up on you is unreimbursed medical expenses above 7.5% of your AGI. And I just gave you an example of what 7.5% might look like. So the deduction starts from that floor. But this might be the year that you discover you have 5 root canals and crowns or something like that. And those things can add up, and they may push you into the ability to do itemized deductions for next year. So that's why I'm saying just anything that might ultimately be an expense, you might want to just hold on to. And of course, charitable deductions, and that's in cash or check, goods, or mileage even. The other thing to keep in mind as you're doing taxes this year or for next year is if you turn 72 or already are in 2022, you are probably required to start taking these required minimal distributions from any tax-deferred IRA and probably from your employer plans, your 401ks or your 403bs. There may be different rules for some of those employer plans, but if you're not still working for that company, it may still be that you have to take the money. If you've retired, obviously you have to. You may delay your first RMD for 6 months from your birthday. So if your birthday is in August, you could take the money in February of 2023. But if you do that, you will also be automatically an automatic distribution of your RMD for 2023 in December or say or about. So now you have two for the same year. So be very cognizant of how that could affect your taxes of suddenly putting double that RMD in. And you will get something from your plan administrator very soon. Either if you're already 72, you've probably already gotten it. But as soon as you turn 72, they usually send you a letter telling you what your RMD is and when you have to take it. And most plan administrators automatically withhold 10%. It's very hard to say, don't take out taxes for this. But 10% may not be enough, depending on what your other income is. So you should contact your retirement plan administrator for guidance on the RMDs. And I don't want to forget self-employed individuals, but this is not specifically about self-employed individuals. But sole proprietorships are reported on a 1040 Schedule C. Means there's no employees, limited expenses, often no depreciation or anything like that. This also does include gig workers being DoorDash and Uber and Lyft, etc. So it's important that if you're self-employed in any way, that you realize that in addition to income taxes from traditional sources like wages or pensions, etc., self-employed individuals are also responsible for paying both their income taxes and what they call self-employment taxes. Self-employment taxes are the Social Security and Medicare that your employer would normally take out for you. Somebody has to pay them. And when you're self-employed, you're your own boss. So you have to pay them. It's about 15% of your net profit. So it's not a small, it may be a small number if your business isn't making much money, but if you've got a good business, it could be a substantial amount of tax that you owe. IRS does require quarterly payments of these, what they call SC taxes. And therefore, there is a way, there's an estimated payments forms that you can use again on irs.gov. But too many self-employed individuals fail to do this. They do not make quarterly tax payments. And so they have a large and unexpected tax bill at the end of the year from their side hustle or their actual self-employment. It's also possible that IRS could assess a penalty for not paying your quarterly taxes. So just be aware of that. It is in the law that you are supposed to be paying that. There is an entire self-employed individuals tax center on the IRS website. Look under self-employed, and there's just all kinds of helpful information and tools about how to manage your business and how to be sure that you operate within IRS rules. And that is that. So if there are any questions specifically, I can try to answer them. If I don't know the answers, I will say that I don't know the answers. I don't guess. I'm going to stop sharing.
I have some questions.
Okay, Joan.
This was very good, Allegra. I should go through it again.
You can have a copy.
So I have 3 questions. One, just to clarify, or I guess say again, if people don't owe and they don't file an extension, they aren't penalized.
That is correct.
Okay. So if they normally don't have to pay and they miss the deadline, they still should file, even though they're late.
Yep.
Okay.
Because there is no penalty or anything for them. Yep, that's true.
Okay. So my other question, and this is actually
pertains to me. I am self-employed, trying to be retired, but I'm working a little job still. And I had to pay this year. Could I have, I'm over 65. Could I have contributed to an IRA?
If you're working, yes. This year they changed the rules, so you can do it. What used to be you couldn't do it, but if you're working over an age, because 65, it kind of everything stopped. But now they changed the rule on the IRA. I think it's, I don't want to, I know it's this year. I know it's for 2021. It could have been for 2020, but I'm not going to guess that. So it's definitely for 2021. You can contribute up to the amount you're earning to an IRA.
To the amount I'm earning?
Well, up to $6,000, $7,000.
Up to, and so even though I'm over 65, I can do that.
Yep.
Okay. Well, heck, I didn't
Thanks
know
to the
that.
change in the law. You might want to quick run and do that.
Which means I'd have to amend though.
Yeah.
Right. Oh, well, this is good information. And then just the last question is more of a comment because I do taxes for Tax Aide. So I'm familiar with some things, but I have noticed that seniors, there are a fair amount of seniors who are not applying for the waiver for tax exemption for their real estate. And I never know if I should say anything because maybe they just choose not to do that.
I think you should say something. And as a matter of fact, AARP Tax Aide actually started something mostly for the states where those kind of waivers happen during the state tax return to make sure that the people are getting what they need to get. But it would not be inappropriate for Alaska to look at, and for Alaska Tax Aide, where we don't have a state income tax, to look at how we could get that information to people well. And even if they're not itemizing deductions, but they've brought in that real estate, and you can tell that they're not, that they're paying, they're paying 100%. And so that program, I mean, when the guy was, it actually is a program under the foundation now for the state tax aid, I think they call it. Anyway, we didn't try to slip it in this year with Alaska. They talked about it during our regional meetings about it. And I did ask if they would be interested in doing something for a state like Alaska, where we don't have a state income tax, and that isn't how we would make this happen for people. And they said they were interested, but it was more complicated for them and more complicated for us. So I didn't pursue it this year, but I think it is definitely something that we could offer as a side bonus.
Okay. Thank you. That was a very good presentation.
Thank you.
Yes, thank you, Allegra. So we did have 2 people sign up, so I will make sure that we send out a link to the recording.
Yes.
And Allegra, if you send me the PowerPoint, we'll also include the PowerPoint.
I will do that.
The people who registered.
Yep. I'll send it as a PDF because right now it's a Google Slides, and yeah, I don't know how that. Good. I don't know how that registers when you put it into PowerPoint. So I know going the other way, it doesn't work very well, but I'll send it as a PDF, which is what you probably want anyway for the sending.
All right. Thank you both for being here.
Wait, okay. Could I get the link too? So I'm going to send it to my financial partners or partnership network.
Yes.
Okay.
Okay. Bye.
Bye. Thank you so much.
Thank you, Allegra.
Thank you.